next guest suggests Nvidia's monster rally is evidence a fear of missing out is forming in the market. Julian Emanuel is Evercore ISI Senior Managing Director. He joins us here on set. Julian, great to see you.
Great to be here.
So how do you sort of think about what investors want, how they're positioned, the trend versus the fundamentals of where we are right now?
So I'm going to start by acknowledging two things that Bonawyn just said that is absolutely spot on. The first being, essentially that it is not about being right. It's about making money in a lot of this business. But the second, really sort of tying in from the first, is that there are times when one has to think about protecting one's capital rather than growing one's capital. And look, our call that there is FOMO in the market. You see it in the options market. Calls are trading at all-time expensive versus downside puts. The sentiment is very, very bullish. The bears have been eliminated, short interest, all of these things. And also, anecdotally, the same clients, a lot of which we know going back to 2000, have begun in the last couple weeks to talk about the potential penalty that they might pay for being underinvested. That's the first time that's happened since 2021 for us. That's a bit of an alarm bell. Now, the other thing is that the humility of this business is really evident in some of these stocks moving. Look, we have been on board in pieces. We like communication services. It's been a great sector. We think there are defensive properties. But all in all, this is a time where, when you look at it, the S&P is up 43% since the October 22 low. The NASDAQ is up 71%. And guess what? Earnings at the S&P level are the same that they were 2 years ago. NASDAQ, obviously, we know where the earnings power is. But at the broad index level, 22 times is very expensive. We just think it's time to think more about risk than reward until we get just a little cooling off.
I almost thought you were going to go to, we want to be long, but we don't necessarily see the fundamentals stacking up. But it sounds like that's where your clients are at this point in time, when they're feeling forced to be long, at all-time highs.
That's part of the message. And again, I think, and we compare this to 2000. And the good part about comparing this to 2000 is the valuations are not as extreme. Basically, the seeds for a downturn started to appear in early 2000. You didn't get the recession till 01. We do not see that yet. But on the other side of the coin is that the concentration of the top five right now is 25%. That number was 18% in 2000.
So, Julian, when I look at it, there's always two sides of the market, right? So when I look at it, I think people were offsides and people were overestimating how bad things were going to be. So they stayed out of the marketplace, and that created a pent-up demand. They're worried about the recession that hasn't come yet, or maybe there was sort of a rolling recession that we didn't see. That's why the money rushed in. So I always think that you can remain that way or offsides on both sides of the market. We got so defensive and people pulled back so much money from the overall market. Now they're dumping it in. So I don't know if it's fear of missing out as much as, hey, this is the game in town that I have to be on board with because the apocalypse is not coming, at least for the foreseeable future.
And I'm sympathetic to that to a certain extent, Steve. But at the end of the day, you're still making 5% on cash. OK, and so there is an element.
True, you can make 5% in 10 minutes.
In 2 minutes, really, seeing some of these names. But that is the entirety of the calculus that for us says, and we've had this conversation from time to time, is that when you're actually thinking as if nothing can go wrong, which the market in a lot of ways is, that's the time when you have to think about if you got an average size pullback in the average non-recession year, the market pulls back 13% from peak to trough. You need to be a buyer, not a seller. And if you can't see yourself being a buyer down there, you should probably lighten up a little bit here.